Unit 1, Introduction of Single Entry System. The learning objectives. In this unit, we are going to discuss about the meaning of single entry system, characteristics, advantages and disadvantages of single entry system, the difference between double entry system and single entry system, and methods of recording accounts under single entry system. The meaning and definition. There are two systems of accounting. One is single entry system, another one is double entry system. According to R.N. Carter, single entry system cannot be termed as a system as it is not based on any scientific system like double entry system. For this purpose, single entry system are nowadays known as preparation of accounts from incomplete records. Under double entry system, many records are prepared, but under single entry system, few records only maintained. And double entry system is a scientific method, whereas single entry system is an unscientific method. Double entry system, golden rules are there, and the single entry system, there is no such rules. The term single entry refers to a method of maintaining the accounts in a manner convenient to a business house which does not exactly follow the principles of double entry system. So, single entry system, a trader will follow his own method which is convenient to him. There is no rules. And under the system, only the minimum accounts are being maintained. That is, under single entry system, only personal and real accounts are being maintained and not nominal accounts will not be there. And normally, cash book and personal accounts of debtors and creditors are maintained. The other impersonal accounts, real and nominal accounts, may not be maintained. Here, there is an example of single entry system which is followed by a sole trader. Normally, under single entry system, there is no proper format, there is no rules. According to the convenience of trader, he follows his own system. Here, the first column is date, the second column is the description of the transaction, and the third one is notes and transaction value. Under that, expenses, income, and account balance. On 6th January, the balance is $5,000. On 6th February, the trader paid rent $1,000. So, the balance reduced to $4,000. And on 6th March, there is an income $500 and the balance is $4,500. On 6th April, again furniture being bought for $1,500. Again, the balance reduced to $4,500 minus $1,500. It has become $3,000. And on 6th July, the balance is with $3,000. And here it is an example of sole trader, those who are following single entry system. Here is an example of a general merchant. Normally, he invests capital and purchasing provisions and groceries that are required for the shop on the wholesale manner. Then he will sell it to the retailers. And he meet the day-to-day expenses, paying salary, and also rent to the shop. These are his expenses. Income is when he sells the goods under retail system, he will be getting the income. So, he normally used to write all the details according to his convenience in a small paper or in a diary, or according to his convenience, he used to record the transaction. Second example is cinema theatre, where in the cinema theatre, the income is by selling the tickets. The expenses is purchasing of film rolls and also the maintenance of cinema theatre, paying wages to the workers of the cinema theatre. He also just write the income and expenditure, and he maintains his own methodology of maintaining books of accounts. And another example is the boutique shop, the retail store. And here they used to sell ready-made garments. They purchase ready-made garments under wholesale and they sell it under the retail system. So they invest capital and purchase the garments and sell it to the retailers. Income is the selling of garments. Expenses is like purchasing of garments from wholesalers and paying rent to the shop and paying salary to the workers and paying electric charges and other expenses like office expenses, stationery, like that. And another example is the example of toy shop. Here also, they just write the records. It is just like the single entry system. Now we are going to discuss about the difference between double entry and single entry system. Basis of difference: double entry system, single entry system. Recording of transaction. Both aspects of all transactions are being recorded. Here, both aspects, in some other cases, single aspect and no aspect is recorded. Under double entry system, debit aspect, credit aspect, both will be recorded. But whereas in single entry system, sometimes both aspect, sometimes single aspects, sometimes no aspect. As they like, just they record. That's it, no rules. And opening of accounts. All personal, real and nominal accounts are opened, whereas only personal and cash accounts are opened. Here sometimes real accounts also may be opened, some occasional cases. Then preparation of trial balance. Trial balance can be prepared because here all the types of accounts are being opened. Here trial balance cannot be prepared because all the types of accounts are not prepared. And fourth one, ascertaining P&L account. Account profit or loss can be found through trading and profit and loss account. Profit or loss cannot be found normally in the absence of trading and profit and loss account, because we know here the available information for profit and loss and balance sheet is not available. Hence, we cannot prepare the trading and profit and loss account. Then revealing financial position. Reliable financial position can be found through balance sheet. Here, the balance sheet cannot be prepared, so financial position is very difficult to ascertain. Accurately, we cannot ascertain because here we cannot prepare balance sheet since the insufficient information with respect to the preparation of balance sheet. And next one is acceptability. Acceptable for income tax and other tax purposes, for rising of bank loan. Here, not acceptable for taxation claims rising of loans, because if the firm, if it is need of funds, naturally they have to obtain loan or they may be in a position for financial assistance. In the case of double entry system, with the help of all balance sheet, trading, P&L, we can refer it and can ask for loan. But here such things are not possible because here balance sheet is not able to be prepared. Single entry system, under single entry system, the tax authorities will not accept, because tax authorities accept only the recording of books of account under double entry system. And acceptable evidence. In case of disputes, accounting records can be produced in courts of law. the accounting records are not acceptable evidence. Because under double entry system, everything is being entered systematically. There will be a journal, there will be vouchers. First of all, vouchers will be there. Along with the voucher, bills will be there. And the voucher will be approved. And from the voucher, the journal will be recorded. From journal, ledger will be prepared. So there are set of procedure. So the documents are available wherever the dispute arises. Under double entry system, the records is able to be produced. Whereas under single entry system, no such records are not cannot be produced because the information is not available, sufficient information and documentary evidence are not available. And utility suitable for any type of business of any size. It can be followed by small businessmen who can exercise personal control over the business. Because the big companies, they follow double entry system, whereas the small traders, those who are having limited resources, then he follows only single entry system. Internal check. Internal check is possible, whereas internal check is not possible. Because moreover, under single entry system, it itself, it is very small. So internal check system, if it is going to be installed, then it will be costly for single entry system. Internal check means the work of one person is automatically checked by the another. Since the single entry system is a tiny one, it is the cost factor that internal check is not possible. The next discussion is about the difference between statement of affairs and balance sheet. Statement of affairs, balance sheet. It is prepared on the basis of available records. It is prepared on the basis of ledger balances. Because statement of affairs, it is prepared under single entry system. So whatever be the records available, statement of affairs will be prepared. But here accurately all the informations are available. So journal, from journal the ledger, and ledger to trial balance to balance sheet. So with sequential order, the balance sheet can be prepared very well. And under statement of affairs, it is prepared under single entry system. It is prepared under double entry system. That we know well. Value of asset and liabilities or estimates except the few items. Here approximately only the valuation will be done. Whereas in the case of balance sheet, it is not so. Value of assets and liabilities are not the estimates. Fourth one, value of assets will not be equal to liabilities since the balancing figure represents capital. That is the net worth, otherwise it is called capital is equal to asset minus liabilities. Like that we can prepare. Or asset equal to capital plus liabilities, like that. But here the value of assets will equal to liabilities and capital. Here accurately we can say that the asset will be equal to liabilities plus capital. And here, since the two sides of statement of affairs do not tally, arithmetical accuracy of accounting records cannot be proved, because here it is not prepared as per rules. So it is not so that arithmetical accuracy will not be there mostly. Here, since the two sides of balance sheet tally, arithmetical accuracy of accounting records is proved, because balance sheet is prepared after the trial balance. Trial balance is what? It is the statement prepared to know about the arithmetical accuracy of the transactions. So, hence the balance sheet also will prove the arithmetical accuracy. It is difficult to trace omission of an asset or a liability because it is not prepared properly. Hence, finding out any omission, it's very difficult to find out. Whereas it is easy to trace omission of an asset or liability, because it is as per rules the balance sheet are prepared, so the whatever be the missing figure that can be easily found out. And next one, it is prepared to ascertain financial position and also the trading results of a business. The whatever be the result, because we prepare the statement of affairs, what is our closing capital, what is opening capital, drawings, additional capital, etc. The net result can be of the statement of affairs. If it gets tallied, or if it is, we can able to understand what is the trading results exactly. And here it is prepared to ascertain the financial position of the business. So the balance sheet is, of course, we know very well that the balance sheet is prepared in order to know about the financial position of a business. There are two methods of single entry system. One is statement of affairs method, otherwise it is called net worth method. The second one is conversion method. Under double entry, we prepare profit and loss account and balance sheet, whereas under single entry, we prepare statement of P&L and statement of affairs. The balance sheet under double entry, the same thing we prepare under single entry, the same concept, but here it is being called statement of affairs. Here, under double entry, a transaction transferred to journal, then ledger. There is no such things under single entry system. Under double entry, we prepare trial balance. There is no trial balance under single entry. Here the rules of under double entry, debit and credit rules are there. But no such rules, only memory. With the help of memory, the business trader, he will record the transactions according to his own convenient. For better understanding, we will have an example to understand about the concept of double entry and how the single entry differs from double entry. Say for example, in double entry you know well the opening capital. For example, the opening capital, it is 2 lakhs. We add additional capital, it is 50,000. So the capital becomes 2,50,000. Then there may be drawings. Drawings means personal expenses. Normally, we used to deduct drawings under double entry system. For example, drawings is 10,000 rupees. Then we get 2,40,000. Imagine that you get profit in your business, so you are adding profit. From profit and loss account, we will take, you get profit. Imagine that you get profit and you are taking from P&L, it is 20,000. Now, your capital will become 2,60,000. At the end of the period, you get, which is otherwise called the closing capital. It is 2,60,000. Suppose under single entry system, with the same example, we will have We start from closing capital. We start from closing capital. How much? It is 2,60,000. Then what are the things you are doing under double entry? You are going to do just opposite under single entry. If you add capital, additional capital, here you have to minus the additional capital. You have to minus the additional capital. It is additional capital is 50,000. When you deduct from capital, closing capital, it becomes 2,10,000. Then here under double entry, you have deducted drawings. Under single entry, you have to add drawings. You have to add drawings. Drawings is 10,000. So here you get 2,20,000. Your opening capital is 2 lakh. You have started the business with 2 lakh. So you are deducting the opening capital minus opening capital. Opening capital is 2 lakhs. So your profit is 20,000. Your profit is 20,000. Here see, here the profit, the same thing. Under double entry, what you are getting, the same thing you are getting under single entry also. So, suppose in the exam, why I have given this example? In the exam, if you have been asked to find out the profit, you know well about double entry system. So, what are the things you are doing under double entry? The opposite way you have to do under single entry. So, the things when you add something in double entry, then you have to deduct it. If you deduct under double entry, here you have to add. Just to do the things or to do the problems, this will help you. This is the statement of profit or loss for the year ended. Already I have given the example to understand this pro forma, but yet we discuss what exactly the particulars, rupees, capital at the end, add drawings during the year, less additional capital introduced during the year. The answer will be adjusted capital at the end. Then less capital in the beginning. The answer what you may get is either profit or loss for that particular year. In a problem, when it is being asked, they may give you all the informations like capital at the end, drawings, everything they will be giving. So you can be able to find out just by applying this, you can able to find out whether profit or loss. Sometimes the information like capital at the end or capital at the beginning, any missing information will be there. So by applying this format, you can able to find out what is the missing information, missing figure you can able to find out. So this is the idea of given the statement of profit or loss. Next one is problem number 1. Shankar maintains books on single entry system. He gives you the following information. Capital on 1st April 30,400. This year is 2018. Capital on 1st April 2019, 33,800. Here you can very well understand 1st April 2019 is the closing capital and April 2018 is the opening capital. And they have given you drawings made during the period April 2018 to March 2019. Current year, that is the period for which we are going to find out, is drawings are 9,600. The capital introduced on 1st August 2018. This is in between April 2018 to March 2019. This capital, August 2000 capital, means it is an additional capital. You are being informed that it is the additional capital that is being introduced. It is 4,000. So hence you know well that a closing capital, then you have to add drawings minus additional capital minus opening capital. What you are going to get, we will see. The question is, you are required to calculate the profit earned or loss incurred by Shankar. So we will check. The capital as on 1st April 2019, it is 33,800. This is the closing capital. Add drawings. All the information furnished to you, every information required is furnished to you. So you can able to find out the answer directly. No need for any workings. So you are adding the drawings. You are getting 43,400. 33,800 plus 9,600. You are getting 43,400. Then additional capital. You have to deduct the additional capital. Less capital introduced on 1st August 2018. It is 4,000. The answer what you are getting is named as adjusted capital as on 1st April 2019. It is 39,400. Then less capital on 1st April 2018. That is opening capital. It is 30,400. So adjusted capital is 39,400. The opening capital is 3,400. See, your capital has been raised to 39,400. It implies. So you are getting the profit. What you are arrived is the net profit for the year is 9,000. So in this problem, you are getting profit. And some other problem, you can get loss also. You have to compare what is your adjusted capital, what is your opening capital. If adjusted capital is less than opening capital, then you may enter into loss. If the adjusted capital is more than the opening capital, the result will be profit. This is problem number 2. The aim of this problem is, some of the information is furnished directly and some of the information you have to find out. There are some indirect information is being given. With the help of that, you have to find out the needed details, needed information for your solving the problem. Sanjay started a firm on 1st April 2018 with a capital of rupees 10,000. On 1st July 2018, he borrowed from his wife a sum of rupees 4,000 at 9% per annum. Interest not yet paid for business, and introduces a further capital of his own amounted to rupees 1,500. On 31st March 2019, his position was cash 600, stock 9,400, debtors 7,000 and creditors 6,000. Ascertain his profit or loss taking into account 2,000 for his drawings during the year. Here the information directly is given is opening capital 1st April 2018, it is 10,000. The second information is they have given that he borrowed a loan of 4,000 from his wife at a 9% interest, and that too the interest has not yet paid. This is the information we have to use. Where to use, we will check later. Then he introduced a further capital of rupees 1,500. On 31st March 2019, his position. Here the information is like assets and liabilities are being given. So hence that you have to find out the closing capital, because 31st March 2019 capital is not given directly. They have given the information regarding the finding of closing capital. So you have to prepare statement of affairs on 31st March 2019. With the help of that, you have to find out the closing capital. So he is asking to prepare the statement of profit and loss. The another information is 2,000 as his drawings. This is also the direct information, drawings. And while you are preparing statement of affairs as on 31st March 2019, you have to take into consideration the loan which he bought on 1st July 2018 from his wife, along with the outstanding interest. So this is the problem. So let me have first, whatever be the problem is being given, you have to do workings wherever it requires. So we do workings for the interest 9%. Calculate the interest on loan borrowed from his wife. The details given is the loan borrowed on 1st July 2018. 1st July 2018. The loan amount is equal to 4,000. Interest rate 9%. Here we have to calculate interest on loan from 1st July 2018 to 31st March 2019. March 2019. So how many months from 1st July 2018? July, August, September, October, November, December, January, February, March. Up to 31st March, it is 9 months. So you have to calculate 9 months. How you get 9 months? You have to calculate from 1st July to 31st March 2019. So now calculation of interest 4,000 into the percentage is 9/100. For how many months? We have to calculate for 9 months, that is 9 by 12. With the help of calculator, you calculate, you are getting the interest is as 270. So, interest on loan borrowed, interest on loan borrowed from his wife equal to, it is not yet paid. So, you have to find out the interest on loan and you have to include along with the loan while preparing the statement of affairs as on 31st March 2019. Next. Here, the statement of affairs as on 31st March 2019. It is liabilities. It is all the information. It is being given, directly given. So, creditor 6,000 and Sanjay's loan 4,000. Now, through working sheet, we found out 270 as interest on loan. So, 4,000 plus 270, 4,270. And here, the cash, stock, debtors, it is being given. When you balance it, you are getting the capital, that is the closing capital as 6,730. This is the closing capital we found out. Then this is the statement of profit or loss account. Here, with the help of all the information that are directly found out, we can take, and also through working note we found out some of the information. So, capital at the end, it is 6,730 and capital introduced during the year, it is 1,500. So, you are getting 5,230. Then add drawings 2,000, it is being given directly. So, what you are getting is adjusted capital at the end. It is 7,230. Then less capital at the beginning. It is also given directly 10,000. So, your capital is, Sanjay's capital is 10,000. And now after all the adjustments, it has become 7,230. It is being reduced comparing opening capital. So, the result is net loss. The result is net loss for the year. The amount is 2,770. This is the net loss. So, I think you understood this problem. So,